Good afternoon, ladies and gentlemen. Just another weekly forecast session. Going to start with a top-down analysis. There's not much to see this week because we are obviously in a bearish trend, and the market has been consolidating quite a bit, taking into consideration what we're seeing within the European geopolitical situation that's playing out. However, when we look at the top-down scenario that we have at the moment, on the weekly basis, we kind of can see obviously rejection, bearish moves to the downside. The market came back up, respected the fair value gap, the supply that was created above this, retraced, came back down, created a new low. This is obviously COVID. And as the market basically works its way back up out of COVID, we can see that it hasn't actually taken the supply that created that level with a new low that was created below the previous low. So we've effectively got structural points determined. Lower high, lower low, lower high to this high, lower low to this low, and then when we retrace back up, this is a lower high to this high, previously respecting the downward trend, and now we're seeing the markets obviously consolidating and compressing down towards an area of interest. Now, at the moment, currently on the weekly, we can see that the previous 3 weeks have been bearish on a continuous run, which shows good, strong bearish momentum. Pro trend for the market obviously currently is bearish on the higher time frame, and we're kind of seeing that play out effectively as we look at these last 3 candles being formed. A very good, strong push down to the downside. We can effectively see equal lows that were sitting below this level, which we had marked up from last week. They were liquidated with this week, which was within our projection. We kind of said that the market was going to come down, liquidate these levels, and then retrace back the other way. What we're now looking at, if I can remove this kill zone here, so turn that off. What we're looking at now, the market has actually fallen into an area of higher time frame interest. It's an area that we had marked up. This is effectively on the daily. When we go down to the lower time frame, you'll see it's effectively sitting on a daily demand candle right now. It's liquidated below, hit the demand. The demand on the lower time frame is effectively a fair value gap, a 4-hour demand, and the daily demand sits below this. It is actually all right now sitting within a weekly demand. So if we were to mark this out and effectively put a box around this, okay, that is our daily demand. And when we now go down to the lower time frame, you'll see how that kind of sits considerably across all the other lower time frame areas of interest. So we're in the weekly demand. If we now remove that, we can see that we effectively now sit within a 4-hour demand and a daily demand at the bottom here. However, there are areas of interest within that higher time frame zone, which when we zoom in, you'll see the fair value gap is left behind here as the push to the upside that obviously broke structure. We've got a lower time frame 4-hour demand sitting here. We've got liquidity sitting down here. And there's also an area of consolidation here, accumulation, that kind of then took the market up to the upside again. So again, we're watching these areas to see how the market reacts out of it. When we get down onto this time frame, we can see now the market has effectively taken equal lows that were sitting across this level, tapped into the fair value gap, rejected to the upside, didn't break supply, respected supply, left behind equal highs, and then effectively broke to the downside quite aggressively, taking equal lows with this spike down, came back up, respected the fair value gap that created the push, left behind equal highs, and has now it's a continuation move effectively. So we've got base drop right now, and we're looking to see how it kind of reacts out of this area here. When we then go down into the lower time frame of the 1 hour, we can see that the market has obviously respected structure as it comes down. Lower high, and then lower low, lower high, lower low, consolidation, lower high behind this high, and now lower low. So when we go down to lower time frame as the market opens, we want to see how Asia kind of opens up and targets these particular areas in respect of liquidity being left behind here. We can see that obviously the market liquidated sales here before it kind of created this move to the downside. It has left behind areas of interest here on the lower time frame that we could kind of see the market come out of this fair value gap, respect, and then continue the move to the downside. Or we could effectively see it come out of the higher time frame fair value gap here on the 4-hour and possibly reach up for liquidity further up before it continues to sell. So the bias currently still stands as bearish. We may get a short-term bullish reversal to then continue for sells. But that is the forecast for this week. Slightly longer than usual, just over 5 minutes. I hope it has given you an insight in respect to what to look for in the market. As always, you want to look at what you see within the current area that you're trading, what the market structure is telling you, and where areas of interest could be defined in terms of looking for a reaction out of those areas to then obviously catch the trade when the market structure itself shows you what it intends to do. So effectively what we want to see here, the market is consolidating right now, which it has done as it came into the area of imbalance where the fair value gap sits. We can see it slowed down. We want to see how it kind of respects this area or rejects from it. Currently, it's obviously respecting the previous structural points that were created. We've got equal highs left behind here. An indication of this would be that the market seeks to liquidate and then push up, take equal highs into a fair value gap, possibly here, possibly here, possibly here, possibly here. And then obviously you want to see the rejection to the downside from there. Again, we will trade when the market gives us the confirmation on which directional bias it wants to take. And effectively, it could be buys up from this level to even up this high, or we could basically see liquidation below, rejection to the downside, respecting of these fair value gaps above, and then continuation of sell. These are the two scenarios that we'll be looking for. But again, as I said, when the market does open, we'll get an indication of its bias and intent. And only when we get the confirmation on directional bias, that's when we look for those trades to be entered. Okay, trade safe as always. I will continue to post on Instagram and give an update as I take my trades throughout the week. Great week this week, effectively not too bad, not too shabby, but hasn't been in line with what we actually been seeing over the past few weeks. 26 hours taken and effectively just trading 5 scenarios over 2 days. Not a bad week at all, but again, it's all about managing your position, getting your expectation right, having a trading plan and executing your trades according to a very strict defined parameters for you to enter a trade. And only on that basis will you then see the probability of your setups being positive and preventing yourself from being stopped out on trades that are not the prime setup and don't have the number of confirmations that you should have been able to identify through backtesting that I've already run through. Effectively, we're looking for equal highs, equal lows, areas of interest, imbalances, fair value gaps, and all of these actually all whittle down to order flow in the market, liquidity, and how the market moves from liquidity to liquidity in order to neutralize orders and also fuel the move that it's intending to make. And that's all determined and defined as structure plays out, as the candles print, as structural points are taken and liquidation happens. You'll see mitigation of a zone and then respect of that move that caused the liquidation to then obviously respect it in one direction or the other. As always, the prime setup that we want to look for is liquidity being pulled to the top side or downside in the form of equal highs and equal lows. And then one of these gets taken and then the move gets respected. We then have determination of the bias. And then effectively you come back into your area of interest to then continue the bias. Now that could be one way or the other, but effectively you want to see liquidity being taken, either top side or bottom side. The move is then blueprinted, so the market then breaks structure. It comes back, tests an area of interest, which could be either the actual supply candle or demand candle that caused the move to the upside. It could also be the fair value gap, the imbalance that's left behind after that move is initiated, or it could be a zone further up, which the market kind of utilizes to tap into, because if all orders down below here are all mitigated, there's no need for the market to return to this point. It could actually retrace back to this point here and then move in the opposite direction. Another thing which, you know, I don't really rely upon strenuously, but you could look at the argument of a discount zone. So when the market comes back and it creates this move to the upside, you want to see 50% mitigation of that move before the market then enters a hard push and a leg out to one direction or the other. Okay. All right. Speak soon. Take care. Trade safe.